Welcome to this video. If you're new to this channel, my name is Valter Pontes. I'm an entrepreneur and a property investor. In this channel, I'm going to explain to you how can you build your portfolio. I built my portfolio from zero. I built 8-figure portfolio here in the UK and also in Portugal. And here I'm going to explain to you how can you do the same if in case you start with money or you start with no money. In this video, we're going to be talking about how should you build your portfolio. Should you build your portfolio in your personal name or in your company name? This is one of the most common questions I get. In this video, I'm going to explain to you exactly when should you use each approach and why most people get this wrong. Before we start, let me just tell you, this is not legal advice. So I'm just going to explain to you what is the circumstance, and then what you need to do, you need to talk to your accountant, and your accountant will be able to explain to you or to decide with you what you should do. So now, how do you decide which approach you should do? So the answer to this question depends on your long-term goal. You need to really think about what you want to achieve. It's very hard for me to tell you without understanding your specific circumstance. However, there are a few things you should consider when deciding if in case you buy the properties in your personal name or in a company name. So it's very important for you to understand, and these are the things we're going to be covering here, because most people, what they do, they make this decision based on what they hear others are doing, and they basically just follow the generic advice without thinking about the individual circumstance. It's very important for you to think about your circumstance, because then you can save thousands of pounds in the long run. So just don't hear people saying whatever they are doing, because their circumstance might be very different than your circumstance. So now here is the first question you need to ask yourself. Are you investing in property to replace your income, or are you just investing in property to buy one or two properties to help you to retire later on? This question will help you to decide which approach you will take. If in case you are investing to replace your income and to build a sizable portfolio, you're usually better to buy a property in a company name, because this makes more sense. And let me explain you why. But here in the UK, if in case you buy a property in your personal name, you won't be able to offset the mortgage interest. And that's going to make a huge difference, meaning you're going to be paying more tax unnecessarily. By the way, if in case your goal is to build a sizable portfolio, you will need a system to do that. What I'm going to do, I'm going to put a video below where I'm going to share my system, the system I use to build my portfolio here in the UK and abroad as well. These are beautiful properties that gives me 90 to 100% occupancy rate. If you wanted to know the exactly systems I do to build these properties, you can watch the video below. Now, here's what you need to understand. When you buy a property in your personal name, you are not allowed to deduct the mortgage interest. That means you will have to pay more tax on the revenue. So you're going to be paid tax on revenue, not in the profit, which is sound crazy, I know, but this is the way the government in the UK is doing currently. So if in case you are building a sizable portfolio, you should be doing in a company name, because you can deduct the mortgage interest. You might be able to pay less tax. So let me explain to you so for you to understand the difference. Let's say you're buying a property in your company name. So let's say you get £1,000 rent, and then your mortgage will be 600. If your mortgage is 600, your company will pay tax in the 400. So you're going to pay tax in the 400 because 400 is profit. You're going to pay tax. Now, if in case you buy in a personal name, you will be paid tax on the full 1,000 revenue. So let's say you have 1,000, and then the government will come and say, look, this is how you're going to pay tax on the 1,000. If you have too many properties, this is going to add up quite quickly. So then you're going to end up paying a lot of tax in the long run. Now, if your goal is just to buy one or two properties and your income is not very high, let's say you have a couple, you could buy in your personal name. So now let's go and break down the two options. So let's first start with the option of personal name. If you're not planning to buy many properties and you're married, this could be a good option. You could use your combining allowance that the government gives to you, and you won't have the cost of running a company, submitting tax returns. You're not going to have costs of paying accountants to submit your tax return. You're going to have a cost of running a company. If in case it's just to buy one or two property, maybe in a personal name makes more sense. But remember, you're going to lose the mortgage interest deduction, can be significant over time. But because you just want to buy one or two properties, this could be a good option. Now, if in case you decide to buy in a company name, you will be able to offset the mortgage interest, as I said, so it's a good thing. And also you have more options to take money off the company. So for example, let's say you have a sizable portfolio, you have quite a lot of properties. What you could do, people pay rent, you pay all the expenses. Now you can leave the money in the company. So meaning you can pay corporate tax and leave the money in the company. If in case you want to pay yourself, you can pay yourself as a dividend, or you can use that money and go go and buy more properties. Yeah. So you don't need to pay the tax immediately, which is a good thing. You just need to pay corporate tax and you can leave the money there in the company. So you also have a level of protection as well, which is very important. So for example, let's say if someone sues you, the property belongs to the company, doesn't belong to you. You as a director, you can take the money, but the property belongs to the company. So there's a level of protection as well, which is very good. In your personal name, you don't have that. If in case someone sues you, the court can say, you know, sell the properties to pay the person, but in a company name, you have a level of protection as well. The downside in your company name is high costs. For example, your accountant, you have to going to have a cost to run a company, so you have a high cost to run the company, but you're going to have other good things, which is kind of a protection as well. Now, the reality is you know your circumstances better than everyone else, and you know what you want to achieve based on your goal. If in case you just wanted to buy 1 or 2 properties, you do in your personal name, but if in case you want to do a sizable portfolio, you might better do in a company name. Based on your goals, you will be able to make the smart decision. So if in case you want to build a sizable portfolio, you will do in a company. If in case you're just planning to buy 1 or 2 buy-to-lets and your salary is not very high, you might consider to buy in your personal name. Just try to avoid generic advice. This tells you to do something just because everyone else do it. Just understand your goal, and then based on your goal, you make the right decision. Remember, this decision will impact your wealth building for years to come, so take the time to consider your long-term goal. I hope this video helps you, and I will see you in the next one. Peace. Bye for now.